Remarkable ongoing growth in the global payments industry continues to attract new market entrants. However, compliance costs can account for 20 to 40% of the remittance costs. And with spread compression led by established fintechs and sophisticated incumbents, launching with embedded efficiency, automation, and a valuable proposition is vital to a startup's success. Can a new entrant succeed with the competitive forces and spread compression?
There certainly are many FX and payment firms out there. In the countries that Datasoft is active in, we are observing continual compression of spreads, tighter profit margins, and this will of course vary from country to country, but then we also still observe some remarkably successful startups.
Impressive historical annual growth of 7% over the past 10 years made the global payments sector a $2 trillion industry in 2019. Every segment is forecasted to grow, adding trillions in flow and billions of additional revenues to the sector. Subject to the post-pandemic rebound rate, this growth trajectory into 2023 could result in a market size exceeding $2.5 trillion. What are considered challenges to enter the FX and remittance space?
Two primary hurdles that a startup must overcome. First, like any other industry, it's primarily about getting customers. Over the past 10 years, this industry has seen some remarkable technology-centric plays that have had stunning success stories. But then at the same time, the opportunity to service clients who want a high-touch, high-service relationship remains. These clients value concierge-type service and expertise in the market. So in this landscape where both technology players thrive, so do boutique service players. There has not yet been a disruptor that completely sways customers in either direction. This tells me that there are different layers of customer needs. And so a new entrant coming into the space has to be really good at competing with its technology, or very good with meeting the needs of high-touch, high-service clientele. The second hurdle is finding banks that are willing to onboard global payment players that do third-party payments. Banks take tremendous risk servicing third-party payments because they do not have a clear line of sight of who the ultimate source of funds are, and they know very little about the ultimate beneficiary. So they're relying on the MSB or FI conducting the transaction. If the source of funds or the beneficiary is illicit, or even worse, the MSB intentionally or unintentionally makes poor choices that results in money laundering or terrorist financing, the legal, reputational, and monetary risk will really hurt the bank. When you stop to realize what is at risk for the bank, to expect a new entrant to have a compliance regime that rivals the bank's own safeguards is really not as unreasonable as it sounds. A new entrant must aim for a high-grade compliance regime, which, if independently verified, will satisfy all stakeholders. So especially over the past few years, with regulatory technology flourishing, the attributes of a strong compliance regime have become very well defined. Compliance experts at banks and audit firms are very clear on key ingredients a solid compliance regime must have. And that's from policies right through to automation. Understandably, banks and auditors will have reservations if these standards are not met.
Massive value and potential in the cross-border payments industry continues to fuel investment and innovation. Industry incumbents are investing heavily to grow market share, while more recent successful fintechs are fostering competition and tightening profit margins. How does a new entrant to the FX and global payment space compete and succeed?
Take two different types of startups and analyze what each might need. If the startup is coming to the industry with a technology play, they will inevitably be the need to solve treasury, risk, compliance, finance, and operational components for the business. And so I think the question is this: should these components be built from scratch, alongside the challenge of successfully engineering their unique technology play? Even if you assume there's limitless startup capital, it stands to reason that investing time and resources in what truly makes the new entrant valuable to the market far outweighs any rationale for building an entire core FX and payment system from scratch. Engineering on top of a complete, proven and scalable core ecosystem, it's going to reduce risk, it'll reduce time to market, and utilize less capital. All key ingredients to improve chances of success. Now, on the other hand, if a startup is coming to the market with a high-touch, high-service play, this model has a substantially higher profit margin, but it can be very challenging to win such business. The question then becomes, what tools will a startup need to prove its value to high-margin prospects? First, the startup will still need to implement the same business components of treasury, risk, compliance, finance, and operations. However, the front and mid and back office will have to be outfitted with automation to be highly efficient in order to maintain sound principles of customer service and customer satisfaction. High-value customers will accept nothing less. Second, high-value customers have differing needs. These customers may demand strong online web capabilities and tools. And in this API era, they may expect a deeper level of integration to their internal core systems. It is telling that the industry incumbents have heavily invested in their technology stack. Their customers' needs are increasingly evolving in line with the pace of technology change. So, for a startup to successfully compete, they must be able to rival both the service offering and the technology stack their competitors already have.
In the face of a rapidly changing FX and global payment space, new market entrants position themselves to succeed if they are able to understand and address the needs of the clients they attract. The service expectation of high-touch, high-service clientele also includes deep technology integration, whereas the sophisticated technology players need to be extraordinary with front-to-back office automation. Regardless of the offering style, having a high-grade compliance regime is tantamount to being banked. All things considered, startups that thrive will be the ones that arrive to market with strong foundational pieces.